Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 2nd of June. All right, now the US politicians have come to their senses and averted the default, right? So they've come to an agreement, and now we're starting to really come back into normal market conditions, right? The market is really snapped back into play. Now, if I just give you a look at where the Asian session is ending, the start of the European session, okay, US equity futures up. We've got a clear risk on day. Right, dollar yen being the odd one out, but nice, easy conditions, right? Nice trading conditions. You can see exactly what's going on. The up move in the US equity futures, well, you can see clear as day that's rubbing off on the Asian and European equity markets, and you'd expect these good trading conditions to continue. Commodities also looks like the foot's been taken off their throat, as well as the cryptos. So we are back into full swing here, folks. And so what can we see from the outcome? Well, to be honest, I wasn't 100% sure if it was a sell dollar or buy dollar situation. There are a few bets going around, or a lot of comments about the Fed pausing. And this is what I was talking about all week. Once you get the decision, then the trade is on. Makes sense to have some break trades on because the trend lines were looking so good. So euro, it's popped to the top side. Dollar index popped down. You've got a little bit of a reprieve here, if anything, on the equity markets, with the NASDAQ still cruising topside. Crypto is still mid-range, and oil coming back to sort of around that $70 a barrel. But the real sort of opportunities were on the currencies, right? If you just come over to the currency page here, okay, you can see clear as day that level, it snapped down through the dollar index. Dollar yen was already sort of teetering to the downside. Dollar Swiss is coming up to a nice level. And I think we need to see the US non-farm payrolls data before we get the next move. Euro had a nice level to get in. Sterling had already sort of left the building, right? And it sort of whipped all over the place. So it was a harder trade. I mean, you could have got this last part, but there's no sort of trend lines to work with. The Aussie, a nice clean snap through there. Kiwis rallied, but with no clear trend lines in sight. It didn't have that extra big push that you get when it breaks through a trend line. So really, the two trades there, Aussie and Euro, I'd say the dollar index there as well, was sort of pretty good if you happen to be around the screens at the time this news was broken. Now, if you weren't, well, there's plenty to play for, right? We've got the non-farm payrolls today. So just giving you a run through the data here. Okay, non-farm payrolls, 180,000 new jobs expected. Okay, previous 253. The range of the data here, very important, 150 to 200. And the unemployment rate, 3.5%, right? A little bit of a surprise last month. The range, 3.4 to 3.5. Average earnings can come into play, but these are the numbers you're really working for. And the big initial move comes from this number, right? The non-farm payrolls itself. The unemployment rate is this sort of secondary thought where they go, well, what's the rate? But really the non-farm payroll change is the key to it. Now that we have clear moving markets, right, we've sort of flushed out a lot of stale positions, as I was just saying, with the on the charts here, with that, the US debt ceiling's done. That conversation's over. You won't hear it. We shouldn't hear about it anymore. The dollar is now really in focus, and we're talking about what the Fed are going to do, right? So there's a bit of a mixed consensus amongst our traders with the recent data. A lot of the US data has been starting to come in a little bit hot. Okay, what does that mean for us? Well, maybe it means stronger non-farm payrolls. I'm not exactly sure. But one thing is sure, we have lost a lot of the advantage around these trend lines, right? You're like, where's all the little buddies I need to help me with this? Like, look how clean a move it was on dollar CAD through a couple of levels. So dollar Swiss, to me, I tell you what, it's got to be on your radar, right? It's the only instrument that hasn't really broken down yet. Or it has a trend line that we can work with. So keep an eye on that, because the rest of these instruments, like the non-farm payrolls, is a little bit loose as a goose by any stretch. Like there's about 6 or 7 pieces of data. So if we get really strong numbers, yeah, the dollar's going to bounce back. But volatility around the release, especially with these instruments, nowhere near any major trend lines, I can tell you liquidity is going to be very thin. And what I mean by that is, you're going to have volatility, big spreads, slippage if you're putting orders close. So just be aware of that as you come into the data. Like, it's great to have the US debt ceiling all done, but we're the charts are a bit smashed up, right? So one clear thing is, we are now focusing on the Fed. Employment, well, it is a piece of the puzzle, but is it enough to sort of shake down the Fed and give us some direction on the equity markets? I don't think so. I think the CPI numbers next week are going to be the ones that we really need to focus on. If you are desperate for an opportunity, by all means, jump in. Try and focus on the instruments, as I said, that do have good technical levels that you can sort of, and why do we want those? For those new listeners, well, they are pockets of liquidity, right? Where you can get into trades a lot easier. And if you don't have them around, well, it's a little bit tricky to get into the trade, and then you can often get flushed out. So just be aware of that as you go into the non-farms. If I just come back to the major page here, you're going to be looking at the US equity markets, of course, for direction through the day. Is that going to help you for the non-farm payrolls? Probably not, right? Because you can be watching the futures. That's where you'll see the initial move for the equity traders following the non-farm payrolls data. And you're going to be watching the currencies there as well. I think it's the non-farms today is a dollar trade, right? Strong employment numbers. I would expect Euro, Sterling, Aussie, Kiwi to get hit and the dollar to rally and vice versa, right? It's a straight up dollar trade. I think there's too many things that have been going on for anything else. They'll start talking about the Fed after the numbers and particularly after the CPI numbers. So we've got to be, you've got to keep your wits about you and know exactly what you're looking for and what you're looking at, right? So to me, that's it. And as I was just saying, there's a whole bunch of data here. So thinking about trading the non-farms, there's a lot of variables that can come into play, and they can be some up, some down, and you can get flushed out pretty quickly. The best trade is probably 30 seconds, a minute afterwards. You'll have a much better idea of where everything's going, and then we can start piecing together next week's trade or trading opportunities, and there's plenty of them, right? So from here, the best news is the US default situation. Debt ceiling has been raised. We've got good market conditions. And you can see very clearly equity markets are moving very freely. Currency markets are back in swing. We've had a big flush out, pressure off the commodities, and we should see things start to sort of go back to normal market conditions. Good luck, guys, if you're trading. All the best. Cheerio.